Welcome to the Tons of Industry Show. I'm very glad to have back my friend and a returning guest, Mr. John Rubino, dollarcollapse.com. I want to talk to you about some very interesting topics today, and welcome you to the show. So, how you been doing?
Hi, Lior. I've been doing okay. Lots of things going on here, but basically life is good.
Excellent. I know one of the most perplexing phenomenons that are happening right now in the finance world is the fact that the dollar is so strong. The dollar index is at an all-time high, and it's been a bull market for the dollar since 2011, so 8 years of a bull market. If you look back and plot the chart, it's a classic bull market for the dollar. It has these 8-year bull markets and then 8-year bear markets. And right now it's sitting right at that 130 on the index where it was at the end of its last bull market. I want to ask you, what do you see in terms of the fundamentals for the dollar, in terms of the technical side, and in general, where's the dollar going from here on? There are two camps. One is saying that this is not the end of the bubble. This will intensify, and the other one's which is saying that this is overdone with.
Well, there are two ways of looking at the idea of the quote-unquote strong dollar right now. One is that if you just look at the U.S. in a vacuum, you would be horrified, and you wouldn't want to hold our currency because our numbers are incredibly bad. We're taking on astronomically more debt year after year after year, and we're mismanaging pretty much every other aspect of the economy. So you wouldn't want to hold that currency if you were just looking at us. But if you look at the rest of the world, we actually look pretty good compared to Europe, Japan, China, and pretty much anywhere else you want to mention, any of the major developed countries, because they're mismanaging their economies in a more extreme way than we are. The second way of looking at the dollar is that when you say it's strong, you're talking about in relation to the world's other currencies. And those currencies are falling in value faster than the dollar is falling in value, which means the dollar goes up relative to them, but they're all falling in value. All the fiat currencies are falling in value. Inflation is 1 or 2 or 3% a year, depending on how the official numbers come out. And we're seeing raging inflation in financial asset prices and trophy real estate and fine art and lots of other sectors where hot money is flowing in, which is the same thing as saying the dollar is tanking against those things. So no fiat currency is strong, but the dollar is the least weak of the big currencies in the world right now. Now, as for where it's going, you're right. There are a couple of different ways of looking at it. First of all, you could assume that the rest of the world is, because it's more mismanaged than the U.S., is going to deteriorate faster than the U.S. is, which means a lot of money will flow in from overseas trying to hide out in dollar-denominated assets and push the dollar up from there, and push financial asset prices in the U.S. up from there. And that's not unreasonable, because there is a lot of capital in the world that does not want to be where it is now. If you're a Chinese millionaire, you want to get your money out of there in a hurry. Or if you're in Brazil and you're rich, or if you're in Europe, Europe is starting to spin out of control. If we have some time, let's talk European politics, because it's terrifying from the point of view of anybody wanting to invest in Europe.
Well, let's talk about it.
Okay.
I just spent 3 months in Europe. So basically since mid June, I was in Nice, which is in the French Riviera, and then I moved to Palma de Mallorca, which is a Spanish island. And then I spent the last 2 months, August and September, in Italy, Florence and Milano and Venice, etc.
Wow, nice trip.
Yeah, definitely. Very nice trip. And I got to see a lot of the mentality of the Europeans. And I know you want to probably talk about that. And also just recently in Berlin, for example, a very important capital, not capital, but a very important metropolitan area in Germany that just capped rents. So the government dictates to landlords how much they can charge in rents for to tenants. Very socialistic. And in Southern Europe, there's a lot of socialistic um, movements and laws and regulation, etc. And of course, the age pyramids are showing that most of these European countries, the fertility is very low. People have 1 to 1.5 children per family, and people are living very, very long lives because of the good weather, at least on the southern end of the continent. So let me give you the floor and talk to us a little bit about the European Union and what you see.
Well, the European project has kind of failed at this point. You know, they were going to have a common currency, and they were going to gradually integrate into basically a United States of Europe, where all the constituent countries were subject to a central government that set the military budget and tax rates and defined social programs for everybody. That's not working. And what's happening instead is that the less efficient countries, led by Italy, are still piling up insane amounts of debt and are heading for some kind of a numerical collapse. In other words, the numbers are just going to stop working at some point. And Italy, possibly Spain, probably Greece, possibly Portugal, are all going to fail one way or another and have to leave the Eurozone. That's one thing. Politically, the other countries in Europe are also a mess. For instance, you've got the Yellow Vest protests that are just going on and on and on in France, and it's not even clear what the point of them is anymore, but they're disrupting French society and forcing the French government to increase its spending beyond the deficit targets that are supposedly allowed in the Eurozone. And meanwhile, you've got Germany, which is the bedrock of the European project. If Germany doesn't work, nothing else works in Europe. And right now, the most recent elections, Angela Merkel's party came in, I think, third, and the far right and the far left are gaining strength, which means that you've got something in Germany happening that's very similar to what's happening in the US right now, where you have the fringe candidates, the formerly fringe candidates, get more votes than the mainstream candidates. You know, Donald Trump on the right and Bernie Sanders on the left typify this process. And if that happens in Germany, where either the far right or the far left end up taking power, then there's nobody left to promote European integration, and Europe starts to break down or starts to spin apart, which means that the euro as a global reserve currency and all that euro-denominated debt become called into question, which is incredibly financially disruptive for the whole world, because everybody's got euro-denominated debt, and you know, a lot of big important investments have been made in euros. And what does that mean if the euro ceases to exist or becomes something very different? That's not even a worst case scenario. That's the likely scenario in the next 5 years for Europe, and that's a very big deal for the global financial system and for geopolitics in general.
Yeah, it's an interesting dynamic what's happening right now in Europe. I want to turn back real quick into the dollar. Gold is rallying alongside the dollar. We saw gold bottoming at 1180 September of 2018. It's 25% higher right now. What's going on with gold, and why is it rallying alongside with the dollar and bonds and all the safe havens? It's just an insane exodus out of risk assets, the likes of which we only saw in 2008. It's like been confirmed, the amounts, the numbers of outflows out of stocks. Are people fearful for a good reason, or is there a little bit of a overhyped environment for safe havens? And if so, is the overhyped environment only in bonds, only in cash, or is gold also in the bubble right now?
Well, they call today's financial markets the everything bubble for a very good reason. Stocks are at levels which in the past led to a huge crash. Bonds are at levels where they've never been before. Big chunks of the global real estate market are at bubble levels, fine art, et cetera, et cetera. You know, anything that rich people can buy with their extra money is in a bubble right now. And So the question isn't whether people should be worried and whether it makes sense for money to be flowing into safe haven assets like gold and the dollar. The question is why is it just now starting? Why aren't people more scared, and why haven't they been doing this for a really long time? Because the numbers have been unworkable for quite a while. And now it's possible that the same dynamic that is making the dollar relatively strong compared to other currencies is also pushing up gold. Because remember, gold is at record levels in most other countries compared to most other currencies. So it's already in a raging bull market in Canada and in big parts of Europe and in many other places around the world. It's just in the US where gold doesn't seem to be rocking yet. And now that it's starting to go up, that's just gold catching up with its place in the rest of the world. It should be much higher than this. And the fact that it's moving in the right direction is one of those it's about time kinds of things. So I think there's a good chance that this is the beginning of a long-term bull market for gold because, well, because of a lot of things. But the biggest is that all the world's central banks are now on the same page. We have coordinated easing in the world for the first time since the Great Recession, where the European Central Bank and the Bank of Japan and the People's Bank of China and the US Fed are all increasing the amount of money that they're pushing into the system. And so the question becomes, where does that new cash go? Does it go into stocks, which are already at absolute record levels? Their US stock valuations are comparable to the 1999, 2000 prior to a gigantic crash. Or does it go into real estate, which, home prices, at least in the US and in a lot of other countries, are at levels where people can't afford to buy houses anymore. So do you really want to buy a house in that kind of environment? No, not really. Meanwhile, gold and silver, at least in the US, are fairly priced. They look cheap. So it's reasonable to think, with the global financial markets very nervous, all the central banks in the world, or almost all the central banks in the world now aggressively easing, pumping lots of money into the system, that a fair bit of that money flows into gold and silver. And it won't take much. These are small markets and very thinly traded markets in a lot of cases, compared to stocks and bonds and real estate. So 1 or 2% of global investable capital flowing into precious metals would send them to the moon. Gold would go to $5,000 an ounce easily, and silver would go to a couple $100 an ounce easily in US dollars. And that's quite reasonable because you've got major portfolio managers, mainstream portfolio managers like Ray Dalio, who don't normally traffic in gold, who are definitely not gold bugs, saying you ought to have 5 or 10% of your portfolio in gold. And 5 or 10% of the average portfolio moving into gold would probably be impossible for the precious metals markets to accommodate. You just wouldn't be able to find gold and silver if 10% of every investor's portfolio was directed towards gold. There wouldn't be available physical metal anymore. So that's kind of what we're headed for, because all of these negative trends from the point of view of financial stability are firmly in place. We have institutional momentum pretty much everywhere that is going to take us off that cliff at some point. Governments are going to continue to borrow more and more money. Central banks have no choice but to ease aggressively going forward. And you combine those two things and you get soaring debt around the world, which is really the big problem. We had way too much debt in 2000, and we had even more debt in 2007. And now we've doubled our debt globally since the beginning of the Great Recession. And if we're going to continue to increase the amount of debt in the world, our financial system will become even more and more fragile as time goes on. So that cliff that we're going to go off will be getting closer and closer, and it will make more and more sense to people who understand the situation to be loading up on things like gold and silver that are forms of money that governments can't make more of. They can make infinitely more dollars. They can't make 1 single ounce more of gold. So the imbalance between the amount of paper in the world and the amount of metal in the world will continue to grow, which should pull up the value of gold and silver until they go parabolic. There's a 6-month stretch out there where the trend line for precious metals just goes straight up. And you want to be there when that happens, even if you have to wait for a while with a really boring pile of inert metal, because when that happens, it's going to be, first of all, a lot of fun. And second of all, a life-changingly profitable experience for a lot of people. So I think, Lior, someday in the next, say, 3 to 5 years, you and I are going to talk again, and our debate will be over when to sell gold and silver because they're up so much. You know, should we sell now or should we hold on for another doubling? And that's going to be a fun problem to have, but it will be a problem, but it'll be fun.
Well, let's talk about Ray Dalio a bit. You mentioned mainstream investors that are piling into gold, like Paul Tudor Jones, like Stanley Druckenmiller, like Ray Dalio. Ray Dalio goes around and talks about the similarities between today and the late 30s. I want to give you the pointers that he gives. And I want to ask you, do you think we are more closer to the late 60s than the late 30s? What he's saying is, hey, in the late 30s, we were about 10 years after a Great Depression. So not 10 years, but 5 years after a Great Depression, 1921 to 1933, just like we had 2008 to 2011. Then he said there was a rising power. Back then, Germany. There was an existing world power, and they were tackling each other. He said there was a lot of populism, a lot of wealth gap. And to me, that all sounds well and good, but I can say the same about the late 60s. There was an established world power and a rising world power. There was a lot of political division. And in this country, there was political assassinations. And here's what's really interesting. In 1968, the US dollar was the best performing asset class in the world. In 2018 was the next time that the dollar was the best performing asset in the world. It took 50 years for it to happen again. In 1969, Charles de Gaulle, president of France, asked for a audit of the Fed. In other words, he didn't believe that the dollar's worth 35 to 1 with gold. In 2019, you have China and Russia de-dollarizing and not appreciating the dollar weaponization and sanctions and whatever else. And same thing I can say about the wealth gap existed in the late 60s, etc. In 1971, we went off of the gold standard. We obviously cannot go off of the gold standard right now, but in terms of the coverage of the ratio, the coverage of the currency supply, right now, we have less of the currency supply covered by gold than we did in 1971. So had we have a same kind of environment where gold accounts for all the currency, in 1971 to 1980, gold went up 24 times. In order to do that, in US dollar terms, do you think we are more close to the 60s or closer to the 1960s, late 1960s, or to the 1930s?
Well, I think it kind of depends on which way we go here, because we've created the conditions in which all this debt has to be resolved in one of two ways. Either we collapse under the weight of it and have a deflationary depression in which everybody defaults, and that's how we get rid of the debt. And then we're in the 1930s. Or we could try to hyperinflate our way out of it. In other words, just create as much new currency as possible and push down the value of all the big fiat currencies in the world. And then we're back in the 1960s, heading into the 1970s. I think we're definitely trying for option number two. We are going to try to inflate our way out of this, in which case you could definitely make the case that this is the 1960s over again. And remember, the 1970s was the major currency crisis decade of our lifetimes, or of my lifetime. Anyhow, you know, a lot of people weren't around in the 1970s, which is hard for me to get my head around, but that's how it is when you get older. You know, you can't believe how young other people are. But anyhow, the 1970s was a period of massive currency disruption. And there was an assumption then that, first of all, that we were going to have to make room for the Soviet Union and adapt to their way of thinking. Also, that the dollar was no longer going to be the world's reserve currency, and that basically all currencies were going to go down in value because inflation was accelerating. And we saw gold and silver during the decade of the 1970s go from, a couple of bucks an ounce for silver to $50 an ounce, and for gold to go from 35 or so dollars an ounce to $800 an ounce, because people were terrified about the future value of their currencies. So we could easily see that we're creating the conditions in which something like that is completely possible, and the world's central banks are actively trying for a benign version of that outcome. But unfortunately, you can't make that outcome be benign. These guys think they can. They absolutely think they can control a modern economy when, in fact, it's vastly too complex for the human mind to grasp. Only markets can operate effectively in a market economy. You can't have a few guys sitting around in business suits around a conference table deciding what to produce and what interest rates should be. But these guys are going to try that. They're going to fail. And then, again, take it back to my original point, their failure will determine whether we're in the 1930s or whether we're in the 1960s. Okay, and we don't know for sure how they're going to fail, but they're sincerely trying to set up the conditions in which their failure will be a hyperinflationary failure.
John, let's talk elections. There's going to be a major campaign trail starting in just a few months. Trump just created a very important win for him with the elimination of the ISIS leader. We see him going into phase one with the trade deal with China. It seems that the markets are continuing to rally into new all-time highs. And it seems like the impeachment is not going to happen. So talk to us a little bit about what do you think? You're an American. You've lived in America for your entire life. Where is this elections going this time? And do you think this could be actually a landslide win for Trump?
Well, I think if the election were held today and it was Trump versus one of the top three Democrat candidates, Trump would probably win in a squeaker, which is an astounding thing to say. I mean, Donald Trump was this aberration that I think even people who didn't viscerally hate him assumed that he was just a kind of a blip, a one 4-year thing to be followed by a return to political normalcy, quote unquote. And here we are with basically, an economy that seems to be growing. Most people are at work. The stock market is at record levels. He's doing some things internationally, geopolitically, that resonate for a lot of people. In other words, pulling us out of these idiotic wars is at least a 51 to 49% popularity proposition in the US. At least a small majority of people would rather have us not be fighting in Syria or not be invading Venezuela or whatever else the deep state wants us to do here. And so he's got a set of issues to run on that actually resonate, so there's a decent chance that he gets reelected next time around. And that assumes that the economy is still growing, stocks are still way up. And that's a year from now in a world where anything could happen tomorrow. So I would say that the biggest threat to Trump's reelection would be a crashing stock market brought about by something that happens somewhere else in the world, a crisis somewhere else, whether it's in Europe or the Middle East, or a geopolitical thing where we actually, kind of accidentally get into a shooting war with China in the South China Sea or some crazy thing like that. That could tank the stock market, which would dramatically limit Trump's chances of being reelected. But I gotta say, I thought he was an idiot who would come and go without a trace. And I find myself approving of at least his geopolitics. I'm definitely a non-interventionist, in part because I have draft age sons, and in part because we have no idea what we're doing in the world. America fundamentally does not understand other cultures. And to the extent that we go stomping around shooting one group in order to put another group in power, and then finding out that they don't like us either, and then we go in and try to kick them. To the extent that we do stuff like that in the world, we make things worse, not better. So the fact that Trump's impulse is to talk and negotiate and flat out withdraw from a lot of places in a lot of situations, I approve. So there's a decent chance he gets reelected. However, having said that, he's definitely a symptom of a deeper problem in the US. We are a fundamentally broken economy. And that's how he got elected. The fact that the mainstream parties threw up all these mainstream candidates, and we didn't want Hillary Clinton, we didn't want John Kasich, we didn't want Jeb Bush. We wanted the guy who said, I'm going to build a wall across the border with Mexico, and I'm going to take us out of all these free trade deals, and I'm going to go to China, and I'm going to impose tariffs on them until they give us back our jobs. Somebody who said that, which is completely out of the mainstream for the Republicans or the Democrats, but that resonated with the voters, means that a significant part of the US populace feels like the system is broken. And Bernie Sanders on the left here is also a symptom of that same problem. That an avowed socialist has an excellent chance of being president 2 years from now is astounding. But it means a lot of people feel like they've gotten the short end of the stick in our economy. They're being screwed over by the rich people. And anything we do to redress that balance, anything we do to take from the rich and give to the rest of us, is okay from the point of view of Bernie Sanders voters. And that's a fairly large part of the population too. So we have a lot of the same political issues that, for instance, Europe does, where the formerly fringe candidates and parties are becoming the mainstream parties with the goal of disrupting the current system. That's, again, terrifying from the point of view of an investor who wants financial stability, because you won't get it from either of those guys. But it's to be expected when you borrow this kind of money. You take on too much debt, your life gets crazy. And it reflects in politics, which then feeds back into finance, which then feeds back into politics. And we're on that kind of we're in that kind of a feedback loop right now. And the only end to it is a huge crash of some sort.
John, what can people find on your website? And do you have a schedule going? Where can people follow you on Twitter? Tell us a little bit about the doglabs.com.
Yeah, that's a gloom and doom news aggregation /blog site where I post my own thoughts on the stuff we just talked about, and then a long links list and a long list of the best videos of the week, of which there are a lot now. It turns out the fact that this has gone on a lot longer than it should have has allowed a lot of really strong voices to emerge in the gloom and doom sound money space. So there are a lot of people doing important podcasts, like including you, that should be seen by a lot of people. So I try to post as many of those as possible, because it's not easy to keep up with all of them. But that's one thing you can do at my site, is you can find the best 10 or so videos of the week, in my estimation, at any given time.
John Rubino, thank you very much, sir.
Thanks, Lior.